What is going on, traders? Welcome back to the Traveling Trader. So today I wanted to go over some of my top picks for recovery stocks as the market is looking to rebound. Now, obviously, we could see a retracement here if we take a look at the SPY. There could be a retracement here now that it's hitting this resistance. Personally, I don't think we'll hit the previous lows that we saw on March 23rd. But either way, that aside, as you know, we're not trying to bottom find, and there are still some really great values in terms of stocks to buy for a recovery, in my opinion, and stocks that I've added to my portfolio waiting for the recovery, aside from the ones that we picked up that we've netted massive gains on so far. If you take a look at our portfolio here, this is what it currently looks like. I bought most of these stocks the week of the stimulus, March 23rd. Tesla up 73%, Visa up 34%, Amazon up almost 30%, and the list goes on. Microsoft, Google, Home Depot, Disney, Nike, Apple, Silver, McDonald's, JP Morgan, Citi, Lululemon, Starbucks, Bank of America, Booking. And then we have some of these here that still have yet to rebound: Intel, Wells Fargo, Delta Airlines, American Airlines, Southwest Airlines. So obviously some of these stocks have rallied massively, and I don't think that we will see these lows on them anytime soon. I'll go over why that is. I've talked about it briefly, but I'll go over why that is. However, there are still some really great opportunities that I believe will be extremely lucrative once the recovery starts back and the economy is rejuvenated back to full scale. And then I'll talk about some of our options plays and short plays. There are some really lucrative opportunities there for those that are wanting to engage in more risk. And I'll go over my take on Bitcoin, what I think is going to happen before the halving and during the halving. The halving is expected to be Sunday, Monday, depending on what time frame that you're in. What is Bitcoin going to do? And talk about some of the alt plays that we recently had. We had a 24% play on BAT, so I'll go over that. And if you want access to the trade alerts, stocks, crypto, options, etc., link is in the description. And if you're looking for a new mobile platform to trade stocks with, I suggest looking at Webull. I've been playing around with it for a while now, and there are so many features on there that I like much better than Robinhood. You can short sell, for instance. It allows you to trade the full range of the extended market. That's 4 a.m. to 9:30 a.m. Eastern time, and then 4 p.m. to 8 p.m. Eastern time, whereas Robinhood will only give you half an hour of trading before the market and an hour of trading after the market. There's also paper trading on Webull. And right now, if you sign up, you get 2 free stocks valued at up to $1,400. It's a random pick that they give you. And in full transparency, it is a referral link. So if you want to sign up, link is in the description below. If you don't, that's perfectly fine too. All right, let us jump right into it. Looking at the S&P, I'll take a look at the SPY here. You'll see that we're coming up on resistance. We've tested this a couple of times, both as support back in February and as resistance the last week or two. We still see this hidden bearish divergence between the price, the RSI, and the MACD, and it's likely that we'll continue to see resistance at this level. I mean, everyone wants to think of the market as up and down movement. Is it going to go up? Is it going to crash? But there could be a lot of sideways action here, right? It doesn't have to go up and down. There could be a lot of sideways action here as the market tries to figure out how to digest the return to industry. We could also see a decline, but here's why I don't think we're going to hit these lows that we see here. If you take a look at the S&P 500, it's a very top heavy index. These are the top holdings in the S&P 500, right? Microsoft, Apple, Amazon, Facebook, Google, and then the Class C shares and the Class A shares, Johnson & Johnson, Berkshire Hathaway, Visa, and JP Morgan. I don't think that any of these, besides Berkshire Hathaway, which we'll talk about in a second because this is one of my recovery stocks, besides that, none of these have a reason to tank. Most of them have actually had really good earnings despite the Q1 woes of the pandemic. So if we're saying that the S&P is going to drop to these lows, you're expecting Microsoft, Facebook, Google, Amazon to take Apple to take such a big hit that it would drag the rest of the index down. And I just don't think that's going to happen. Anyway, super glad we picked those up here. And yes, I did send out the alert for those. To me, on the daily, the S&P looks neutral here as we near resistance. But then if you look at the weekly, this on my chart, the white line right now is the 100 EMA. And if you look at the the fact that we might close and will likely close today above the 100 EMA, right? Because this is the last day of the weekly candle. So unless something catastrophic happens and we crash, which I don't think is likely, we will plausibly close above the 100 EMA. And if you look at all these other dips in the past, the 100 EMA was really where the recovery started happening. We'll talk about 2015 here, but even if you go back to the 2008 crash, the 100 EMA, once we crossed above it, that was the start of the recovery rally, really. In 2015, we had this quintessential W formation where we did cross below, went above, started a rally, and then fell back to the same lows as previous. But the crash, it wasn't really a crash. This was more just a correction. This is a full-on crash. So while anything's possible, the fact that we close above the 100 EMA, I think will be stagnant or gradually rallying from this point on. All right, with that said, what stocks are good for a recovery? What stocks are still good for a recovery? Well, I have a few for you in multiple sectors. So looking at jets, this one is an ETF that tracks the airlines. We all know that the airlines is a distressed industry right now, right? And if you don't want to get in the game of selecting which airlines look better, does American Airlines have more debt than United? Is Southwest Airlines just doomed in the short term compared to Delta? If you don't want to, have to go through picking airlines, Jets is an ETF with a relatively low expense ratio that you can buy into for the long term, and it's not leveraged. And even as a swing, you see here, it's forming a pennant. And if it follows this trend, then, even in the short to midterm, there could be a swing to the resistance of the pennant anywhere between 10 and 12% in the short term. But Jets normally trades in a pretty tight range, which is a good sign, something that you want out of a stable ETF or a stable asset. If you look at it before this, for almost 3 years, Jets trades in this range here between $27 and $35. So, for a long-term hold, I think Jets is definitely a good candidate. Looking at USO, if you're looking to play the rebound on oil, which I think is a little bit riskier than some of the stocks that I'll go through, but this is not a leveraged ETF. This is a one-to-one ETF. So the risk in holding is actually not as great as, say, a leveraged ETF. But if you're looking to play the rebound on oil, which I personally think will eventually get to $30 in the midterm as the economy start opening up. Think about it. Nobody's driving now. Nobody's taking cruise ships. Nobody's flying. There isn't much manufacturing going on. So the need for oil has dwindled. It's basically non-existent. And that's why, we saw oil futures prices tank to below zero for the first time ever earlier this year, just a few weeks ago, really. But as oil rebounds, I think we'll get to the $30 per barrel price again, and that could spell pretty good success for a holding like USO. I added this to my portfolio. Another one is Berkshire Hathaway B. This is the cheaper version of Warren Buffett's stock, which usually trades at a couple $100,000. That's Berkshire Hathaway A. But this one's at around 176. This is near the pandemic lows here, and definitely one that you can pick up for the long term. As you know, this is a holding company with multiple investments and generally is a pretty stable stock. Here is what Berkshire Hathaway looks like over the last 10 years. You'll see that, it is really just pretty much one long uptrend following what an index would look like. So, I definitely like Berkshire Hathaway B here at a discount, especially as it falls below the 200 weekly MA. The last time it did that was in 2011. Beyond Meat, this is one that we swung trade earlier this week. If you're part of the trading group, then you would have gotten the alert. But as it popped above the 200 MA, we swung trade. It hit resistance here, took profits. And now Beyond Meat looks to be closing above resistance. It surprised everybody on earnings. I believe Beyond Meat definitely has a future being a $200 stock plus. This right here is a very bullish pattern, Adam and Eve pattern, or an Eve and Adam pattern to get technical. But this is a very bullish pattern, especially if it forms over months. It has seen a bit of volatility in the past, so you should be prepared to stomach some of that. But in terms of a long-term holding, if it follows up what it did on earnings just this last week, then the future is bright for Beyond Meat for sure. Disney, this is one that we added to the portfolio around $100, but Disney is trading at a major discount. If you think about it, most of its business verticals are distressed right now, right? The theme park business, movies, movie theaters are closed, and then sports because it owns ESPN. So imagine, what that could do to Disney's revenue when those sectors open back up. And then obviously you have Disney Plus, which is a success in its own right. Lastly, we'll take a look at waste management. If you look at waste management, it's another one of these that looks like a stock index. It's just a workhorse, one that would be a great addition or a great, diversified holding in any portfolio. Recently falling to the 200 weekly MA for the first time since 2012. And I definitely like adding this as a long-term holding. All right, in terms of stocks that I'm looking to short, ZOM, this is Zomedica Pharmaceutical Corp. This one is allergic to the 200 moving average, going all the way back to September 2018. It just cannot stay above, and every time it pops significantly above the 200 MA, it comes crashing down. So definitely looking to short ZOM here. Shorting is very risky. If you don't know what you're doing, please don't enter this until you paper trade long enough to feel confident to short. FET is another one. This is Forum Energy Technologies. If you look at the weekly, it has this is one of the weirdest patterns, but most consistent patterns that I've ever seen on a stock. When it hits oversold on the weekly and forms this rounding bottom, it tends to tank thereafter. You see it happening, 1, 2, 3, 4, 5 times, 4 times before this one. And I'm banking that it would happen again on this 5th time. So I'm pretty comfortable shorting FET here for the midterm, even though the last few weeks it's up, over 100% in the last 4 or 5 weeks. Definitely a more risky play, but I'm banking the long-term trend here. And then Hertz. If you take a look at Hertz options, the implied volatility is just nuts on Hertz. And it looks like, for all intents and purposes, they're looking to stave off bankruptcy. And I want people to understand something, that even when something goes bankrupt, there's a difference between Chapter 11 and Chapter 7. If it's Chapter 11, the company can still exist. All it's doing is restructuring its debt. Even American Airlines 6 years ago underwent Chapter 11 bankruptcy. For those of you that are familiar with PG&E, even that stock, they went through bankruptcy in January, and that stock is up, since the pandemic crash. The stock is up, 60% since it crashed. So, and this company just went through bankruptcy in January. So yes, Hertz can go through bankruptcy. It doesn't mean, it's Chapter 7 where the company just folds. They're looking at Chapter 11 bankruptcy. However, it looks like they are going to be rescued and stave off that bankruptcy. Anyway, the implied volatility is so high for Hertz options. So essentially what I did was look out further. If you look at Hertz options, further in the months ahead, you'll see that the volatility, for instance, on the June 12th options are 441%. The volatility on the June 26th options are 453%. I mean, what this means for those of you that are new to trading options is you can get excellent premiums usually when volatility is that high. So you want to be a seller of the option. So I sold a bunch of the $152 put options as well as the $252 put options a couple of months out, just because the premiums were so good. And right now Hertz is up today, but it's trading at above $3. So I'm pretty confident in those price points. I mean, $1.50, $2, I'm confident in that put spread. And I'm collecting such a good premium that I'm not really fretting this. Anytime you see extremely high volatility, you want to look for areas where you could be a seller of those options. All right, let's take a look at Bitcoin. So what is Bitcoin going to do before the halving? If you take a look at Bitcoin, this is the weekly chart. It's forming this repeating rounding bottom pattern, but there is a consistent resistance between 10,400 and 10,500. Now, I did a video about 3 weeks ago that said this is the last time to buy Bitcoin for cheap, to buy cheap Bitcoin before it starts rallying, and it was true. Back then, I think it was trading at around 7,000, and we crossed the $10,000 mark this week. Now, the halving is coming up on Sunday, Monday. And what has happened historically, obviously we've only had 2 halvings before, but if you take a look at what's happened historically, the first halving, in my view, doesn't really count because Bitcoin wasn't as ubiquitous as it is now. And it was actually, the first halving was really a kind of a marker of success. It was looked at as positive as a positive event because Bitcoin had figured out a way to suppress inflation, opposite of what the Fed is doing. But we still saw a little drop a couple weeks after the first halving. The second halving, we saw a 30% drop after the halving. And there was a rally before very similar to what's happening now. Now, why is that significant? Well, think about it. If you're a miner and overnight Bitcoin is going to be twice as hard to produce now, you're going to feel incentivized to sell it on the market for a peak high price, for a swing high. And so what you expect, it's not so much that you expect, retailers or retail traders like us to be selling Bitcoin at the halving because it's somehow a binary event that we've been programmed to sell. But because miners have a lot of Bitcoin, they have control over what goes on in the market. So if miners start dumping Bitcoin because it is now twice as expensive to mine due to the halving, that's essentially what the halving is. You're getting half the rewards that you used to get. Then that could cause a panic selling situation where everybody, including us, start to want to take profits. That is why I still think a decline shortly after the halving is possible, because the miners have a lot of control over the price since they can essentially dump Bitcoin onto the exchanges. And if we take a look at Bitcoin's price, I do think that there is a plausible pullback, just as we see in previous rallies, right? There's a plausible pullback to the 21 EMA, which is the white line on my chart. Currently, that's around 8,500. I wouldn't be surprised if we see a retracement like that. I mean, that would represent a, not a huge drop, but that would represent about a 15% drop. So I would not be surprised if we saw that. Now, there are some that think we could drop to the 50 moving average, which would represent a 26% drop. Also, if we take a look at the VPVR here on the right, it tells you where most of the volume, at what price point most of the volume is concentrated at. If we go back a year, you'll see that most of it is in this chunk here where we're at now. So according to the VPVR, this does look like the peak of where most of the volume is distributed. Doesn't mean we can't cross above. Obviously, we can, like we did back in June, where we wicked to 14K, but quickly came back down because there just isn't much volume support at this level. And you could see that by the VPVR here on the right. So I would not be surprised if we see resistance over the weekend at around 10.4, 10.5K. followed by a gradual decline, maybe 15 to 30% shortly after the halving. Obviously, we're not fortune tellers. This is all just an educated guess and taking into account previous history. All right, BAT. Like I said, BAT, we had a 20+% swing trade on BAT. I sent that out in the trade alerts. Obviously, ZRX just went apeshit. And there are definitely a few good long-term holds to piggyback off of Bitcoin's success. I think that once Litecoin gets back above the 100 EMA here, there could be a good hold on Litecoin. Dash is the same way. A lot of these top alts have the same looking charts, really. But we haven't seen a spike in most alts the way that we usually do when Bitcoin rallies. BCH is obviously flirting with breaking out, and I would watch this because it does tend to follow Bitcoin and sometimes rather disproportionately. Anyway, that is it for this video. Go ahead and leave a thumbs up if you get anything out of this video. Leave a comment down below if you have an agreement, disagreement, question, whatever. Leave it in the comment section below. Let me know what it is that you're trading. Sign up if you want access to the trade alerts as well as our private trading group, crypto, stocks, options. We have plenty of discussions all day about those things, what entries we're getting into, how to set up options plays, etc. If you want 2 free stocks, sign up to Webull. Link is in the description below. Stay safe out there, traders. Peace.